Don't shoot the messenger, bro. Like, come on. Yes. Bitcoin crashed to 60K according to the Rich Dad Poor Dad author Robert K. Can never say his name properly, so that's why I'm choosing to not say it. What's good, guys, man? How's your weekends been? How's your Thanksgiving? Chilling out with the family been? We've got a lot to cover today. Now, some of you might be like, this guy's negative. I can't stand it. Why are you killing our joy? I ain't killing nothing. I'm keeping you in the loop. That's the whole point of this. Today, we're going to be covering quite a few things, guys. Yes, we've got a projection or a prediction by good old Robert, who's suggestive that maybe Bitcoin could be crashing to 60K. What we're going to do is we're going to try and debunk that and make out as if we don't care about Bitcoin's price and we're just only looking for the move to the upside because we don't care about it being cheaper. No, we want it expensive. We want to pay the highest possible price because that's what retail does. If you're cool with that, fine. Just remember, you are making it possible for someone to sell. And if you enjoy that, be my guest, man. You know? Welcome, ladies and gentlemen. If you are new, my name is Tino. Welcome to Traders Reality. We got a lot to get through. So let's jump on with the program. If you are new, hit the like button, subscribe. If you like the flavor by the time you're done with this live, let's break it all down. Let me calm all down the souls of the people that are like, Tino, you're negative. I ain't negative, man. But anyways, let's get with the program and get it all flowing through our bloods. XRP, man, what the I'm not going to talk about XRP until it hits $5. Because every time I seem to say, if it goes to a certain price point, I'll talk about it. It goes to that price point. So I might just play this game of won't talk about it till it does. Seems to be working. Jokes aside, we'll be breaking that down as well for all my XRP holders. All right, let's get with the program, gang. Here we go. So you may have been aware of this Trump story about him saying 100% on tariffs to all the BRICS nations. Now, that is going to be crazy. But people are thinking, he ain't going to be pulling off that kind of flavor. I wouldn't call bluff with Trump. You know? He might actually go ahead with this. But listen, this is tariff. He's weaponizing tariffs. Okay? And that, in my opinion, is what the next war will be. It will be a financial war. Okay? Not your physical pressing buttons war. I think those days are done and dusted. Cold War pretty much explained that. All right? No one's going to do nothing. All right, you can set off a few rockets. Yes, there will be casualties in war. However, really big wars? Nah, it's all going to be financial if I'm quite frank with you, ladies and gentlemen. Speaking of which, we've had some very interesting news about the US and the semiconductor story. This is already starting to unfold. Now, US hits China with a export control, okay? Now, when you dive into it, okay, it just explains to you exactly what the story is. It says here that the US has introduced new export controls in an effort to curtail China's ability to create an advanced semiconductor industry and to slow its development of artificial intelligence with military applications. So you can see it's justified. What I recommend you do is to go and explore the Taiwanese Semiconductor Index, or the stock itself, TSM, okay? This is going to give you a good idea about where we are with this semiconductor war that we've got in terms of tariffs regarding China and the US, okay? Investors are going to be simple with it. They're going to be like, hold on a second, if you're putting a tariff on how much it's going to cost to make these semiconductor chips and us being able to sell them moving forward, how's it going to affect us? Well, this stock will be a great idea to focus on because that will tell you exactly where we are. If you look at NVDA, okay, and then you see that they have a problem with their Blackwell sales, which word on the street is that that's not the case. It looks like they're going to be doing really well with those Blackwell sales and the Blackwell design, sorry. And looking at this with the TSM, it's going to help you understand if there is going to be a problem with regards to these tariffs. So there's the tariffs and then there's the impact it's going to have. So you might be able to get a good discount on this stock right here if this does actually flourish, because there's going to come a point where China's going to be like, all right, man, you made your point kind of thing. What do we need to do? I think these tariffs will only be for a certain period of time, okay, before they end up getting lifted again. Because ultimately, a China and a US relationship would be beneficial in terms of trade. It will make life so much easier and everyone will be happy. And I think that's what Trump, in essence, is trying to get. But looking at his last time when he was running, that was limited due to what happened with COVID. So he's probably going to stick it to them for a little while and then move on from that point. Now, going in with that being said, ladies and gentlemen, this is a problem. No one's talking about it. Why does anybody care? Well, that's going to dictate whether the big money is going to be coming into crypto or not. Saudi Arabia's US Treasury holdings hits 4-year high. Why would that go up right now? Why would they want to increase their US Treasury holdings? For what purpose would that be? They sold $40 billion worth of their US Treasury holdings to go and pick up some stocks, okay? Now they've increased their US Treasury holdings, which would be suggestive that they're starting to sell some stocks, okay? But if they're selling stocks and going into bonds, what reason would they have to do that? Well, it's pretty simple. The yield. Right now, the 2-year yield is flying up to 4.225%. We've also got the 10-year yield itself coming in at 4.232%. What? Okay, we are very nearly, very close to inversion. Very close to inversion. That's a problem. That rings the bell of recession, doesn't it, guys? But we missed that. We skipped that. The Fed never even mentioned it. If we get an inversion on the yields again, that means that investors' expectations of interest rates is going to be, well, the economy is not going to be looking too good in the later future, which means that investors will invest in a 2-year bond as opposed to a 10-year bond, which means that they're going to be favoring paying, or should I say, receiving money sooner rather than later. So if you have a good expectation of the market, you're going to go into the 10-year bond, okay? If you don't have a good expectation of the future, you're going into the 2-year bond, which means that the US government isn't going to be getting the access to all the liquidity for longer periods of time, which means that if the 2-year keeps going up against the 10-year, investors are trying to lock in yield, which would make sense as to what these Saudi Arabians are trying to do. Remember, Japan, China are the 2 largest holders of US debt. Right now, they're locking in some very good yields at these price points. And when the 10-year yield shoots to 5%, that is when you'll get a lot of people buying up US bonds. And I don't think they're in the mood for that just yet. The yields haven't moved to those points, which is where I would expect the bonds to start pulling back ever so slightly. So that's something that we've got to take into consideration. Now, with all the markets moving up, and we just quickly go over to the NASDAQ for a second, you can see NASDAQ has been doing really well. It's been marking up at the start of the markets. Well, not the start, but the markets, pre-markets, Asia, and of course going into the UK, there have been marking price up. There seems to be a little bit of resistance around the 21,000 zone. We've got NVIDIA looking like it wants to gap down at the open. We've got, whoa, it's actually come back up. It was actually gapped down below 132. Yeah, it was just below the daily open right here from on Friday, about 136, and now it's managed to come back up a little bit. So that's looking all right for NVIDIA. In my opinion, NVIDIA is on a discount. They've got a gap down here that could be posing as a bit of a problem. But if the bonds are actually coming down, then by the time the options markets and the futures markets are all open, we're going to really see if they actually do want the bonds to go down. Now, if you just go over and have a look at the options flows on the weekend, okay, so on the 29th, TLT, there was big selling, or should I say big options coming into play to offload on the TLT. What's the TLT? Well, that's the iShares 20-year bond. Okay, if we just click that, you'll see in a second. It'll come up, here you go, the iShares Trust, iShares 20-year plus Treasury bond. Okay, so it looks like that they've been selling quite a bit and it's been popping up. TLT right here. Go down a little bit more. There's another TLT order right there. So not that much liquidity, but you've got to remember what you're dealing with here. There's an expectation that they're offloading on the bonds themselves, which is meaning that the expectation of interest rates or yield is going to be higher, which is why the 2-year could be marking up and the 10-year yield could be moving up going into the open. And that's a problem for tech stocks. So just take that into consideration. Now, a couple of other things I want to draw your attention to as we get started in the week itself. You've got the stock bond ratio, which is at significant highs, and it is starting to come down. And what this chart shows you is how overvalued or undervalued are the stocks in relation to the bonds. Well, it's showing you now that stocks are overvalued in relation to the bonds. So the logic says that we would expect stocks to come down in terms of value so that the bonds in principle will then start to climb back up again. That's what this chart would suggest. And if you look back in the chart and look at all the peaks, usually the peaks of this where the stocks are overvalued is where the bonds are undervalued. There's going to be a rotation, okay? However, when we start diving into other things like the name exposure index, this takes, just to put it into perspective for you, it says here, name firm members are money managers, right, who are asked each week to provide a number which represents their overall equity exposure at the market close on a specific day of the week. Currently, it happens on a Wednesday. Responses can vary widely as indicated below. Responses are tallied and the average to provide an average long or short position or all name managers as a group. So these are the range of responses: 200% leverage short, 100% fully short, 0% cash or hedged or market neutral, 100% fully invested, or 200% leveraged long. From this data up here, it suggests that there's a lot of money managers that are in longs. Big money is in big longs, which could suggest that the markets could be climbing up just a little bit more. But this week, ladies and gentlemen, we have a weak field of data, and I'm talking silly data. This is with the medium impact data. I'm going to get rid of that and just show you what we've got. We have got non-farm payrolls, guys. We've got the JOLTS job openings coming out, ADP non-farm. We've got manufacturing data. Good old Powell's going to be talking again this week, okay? So the main event is going to be the non-farm payrolls, which is going to dictate if the Federal Reserve is going to be cutting these interest rates as aggressively as the market wants. Hawkish comments from federal speakers beforehand have been like, you know what? Yeah, we are en route to get the inflation down, but depending on what Trump's going to do with these tariffs could have an actual impact on whether or not we hold on interest rates or we cut interest rates, but not as aggressively. Now, certain implied volatility figures are coming in suggesting that we're going to be on around a 66% chance of a rate cut, 34% chance of not getting cut. So the swap market, swap traders are effectively betting on, yeah, we're going to get a cut. But that could all change depending on what comes out during this week, which is filled with data. And it's the jobs market that's going to dictate whether or not we get the cuts. Why? Well, they're expecting 4.2%. This has been changed. This has been changed. All right. Platinum members will know that this has been changed. All right. Last night, when I did the market watch, and just remember, ladies and gentlemen, it's Cyber Monday, okay? It's the last time you're going to be able to take advantage of the Platinum membership discount codes and 30% discount on the courses themselves. So those codes are in the description of this live stream. So go and check that out. Once today is done, then you won't get access to those codes. So utilize those codes because it's the Cyber Monday sale, okay? But Platinum members knew from last night that said 4.2%. It's now actually changed to 4.1. Why are they changing it? Because that makes a lot of difference. If it was going to be scheduled to come in at 4.2%, investors' expectations would be like, okay, it's coming in at 4.2. The market can absorb that and build that into the charts, okay? But now it's gone back down to 4.1. So that's very, very interesting to say the least. So this week on Friday, if we do see in the unemployment rate going up, that's going to give the Fed the fuel to cut rates. If we don't, we're probably going to be holding. That means the yields themselves are going to keep moving up. And if the yields keep moving up, that means bonds are just going to get cheaper and cheaper and cheaper because the government is advertising, come and invest with us. And the more time that the yields can go up, there's a greater chance that the inversion could actually happen. Because if investors can see that the expectation of the future is not looking good, that's when the yields in principle will invert and investors will be like, you know what? I'm not locking my money in my 10-year and the 10-year bonds anymore. I'm actually going to go to the 2-year, lock it up for a short period of time, get a certain amount of return on the yield, and then duck. Okay? So that's something to take into consideration. This week is a big week for everything across the board. Speaking of everything across the board, let's have a look at what's going on with Bitcoin. As it stands right now, we've got the Glassnode in front of us. This shows us the net unrealized P&L for crypto holders, all right? Now, I was talking about this last night, and you can see, going back in time, 2011, you can see the blue areas, and this blue area is suggestive of what? It tells you that we're in a state of euphoria or greed. We're not there yet, okay? By the principle of this, it shows that investors are currently in a state of belief. because Bitcoin's price is going up. So we're not yet at that state of euphoria or greed, to put it into perspective. I mean, if we go and look at cryptocurrency index greed itself, here we go. Where is it? No, it's not here. Let me just get that. Crypto. There we go. This crypto fear greed index is just showing us where we are with investors' mindset on crypto. We are at certain extremes, ladies and gentlemen. So people are greedy, people are excited, people are happy, except this dude right here. Where is he? Where is my dude? Here we go. Rich Dad. He thinks Bitcoin's going to crash to 60,000. Okay. Reasoning for it said that there is a bit of a 100K wall. It hasn't quite taken the 100K yet. But he says that this is what his words were on his post. Look, he says, Bitcoin to crash. Bitcoin is stalled short of 100K. That means Bitcoin may crash to 60. If and when that happens, I will not sell. Bitcoin will be having a sale and I will buy more. I predict Bitcoin will settle around 250K in 2025. You might need to change that because that can send people a little bit crazy. 250, nah, it'll be 250K. That's what the logic would say. Okay. So this is what this guy is saying, not me. I'm telling you what this guy is saying. Now let's just go and break it down and look at what else other people are saying about it. Well, going into the state of cryptocurrency, you can see central banks favor traditional payment systems over CBDCs. All right, then. So that's good news. We're not going to get no CBDCs. That might be a positive for some. That might not be a positive for some. Okay. But it looks like they're going to stick to the traditional payment systems, which gives us room for our dearly beloved XRs of the P. As a cross-border payment system, and I received a TikTok from dearly beloved Michael saying this dude is saying that XRP has no purpose other than a cross-border payment solution. You can't mix it with anything. It can't do anything like integration with Web3 and what have you. The main holder holds 57% of the supply, okay? And, you know, all he's got to do is just dump on everyone. And that guy believes that XRP is a sell. Now, there's a lot of hype behind XRP, and you can see that it's actually performing very, very well. And we're getting into very interesting price points. And I can declare that the 4-month chart, XRP has broken out of the XRP formation, ladies and gentlemen. Happy days. We drew this formation out and it's managed to break it successfully. What an absolute joke. There's possible profit-taking opportunities that could be had with XRP, guys. Jokes aside and what have you. Look at it. It's just gone. So a lot of people are getting excited. And what's even worse is I'm seeing people saying I'm going to start buying XRP at these points because I believe it's going to go to $100. All right, then. Cool. That is fine. Okay. Which brings me to Bitcoin. Takeover of Bitcoin creates a new list of risks. I've said this before and I'm going to say it again. The problem we've all got is BlackRock, Wall Street are involved in crypto. Okay. Cryptos come to Wall Street. And when you come to Wall Street, there's certain rules that you got to stick with. Okay. This is the problem we've got. The article goes on to say that the Bitcoin OGs are no longer in control because that was what was making Bitcoin's price move. Let's be honest. It was people in crypto recycling the crypto. Take the money out of altcoins, put it into Bitcoin. Take it out of Bitcoin, put it into altcoins. Now you got Wall Street, where you've got mom and dad investors who are getting involved in the ETF itself. Now, looking at the ETF, we don't really have any activity just as of yet, with Bitcoin currently holdings at 495,000. And the actual article goes on to say, where is it? Here we go. It goes on to say that BlackRock, okay, the ETF, sorry, hold 5% of the supply. That's crazy, okay? Now you've got a new player coming in, which is the US government. And the US government wants to be able to pass the bill, which you remember, to buy 1 million Bitcoin, 200,000 Bitcoin every year for the next 5 years at the time when they do actually pass the bill. Okay. So you've got government, you've got BlackRock, you've got Wall Street. Bitcoin OGs have no longer got any control. So when someone says to me that I've been in this cycle for the past 3 years, you're basing it on the OG cycle. Okay. You've got different players right now, my friend. You got different players that are going to influence it. And we know that because last week, what did we see? We saw this go to 472,000, and then it went down to 415,000 and went back up to 495,000. So we got ourselves a little bit of a volatile situation when it comes to the ETF itself. Who's going to pick up more of it? And we all know that BlackRock, it's always going to come out on top, man. It's the only fund out there that's got $11 trillion worth of assets under its name, and it's buying Bitcoin with its stationary fund. Ah, man, what more do you want me to say to you about it all? But don't lose hope, guys, because Michael Saylor tried to pitch to Microsoft, and he said, look, we're going to hit a market cap of around $280 trillion by 2045. My brother, I'm not interested in 2045. I don't want to have to pay for prosthetics in the year 2020, 2045 because I'm too old to move to enjoy my Bitcoin. This guy's going to be long. I mean, hopefully not. Like 2045, how old would this guy be? How old is he? I swear he's about 32. You know, so obviously holding Bitcoin is a smack in the face for this guy. ADA, apparently, ADA's going to crash. Listen, right? I pull these articles out for you to understand what people are saying about it. We go over to the charts themselves and just say, okay, what's the possibility of ADA actually crashing? All right. Now, there's your anticipation of what you would like cryptocurrency to do or what you would like your asset to do. And then there's what it actually ends up doing. Okay. And if you can accept that it's going to go up, you can also accept that it's going to come down. It's going to come down. If you can't accept it coming down, you're going to need to get out of this game whilst you're in profit, because you'll end up giving that profit back because of your what? Your expectation of hope. There is no hope in trading. I'm sorry. And I know we've all been there and we've all said, oh, I hope this makes a move up. I hope this, I hope that. It just doesn't work. The hope indicator is dead. It doesn't even exist. You've got to trade movement. You've got to trade intention. You've got to trade volatility. You've got to trade perceived value. Going into the week, we have quite a bit of information that can impact assets across the board. All right. Going into Bitcoin price action right now. I mean, just to put it into perspective with ADA, it's just not really gone anywhere other than gone to an area that it's been before. So why would I get excited about ADA? And that's not to hate on ADA at all. It's just there is now an opportunity to take advantage of the accumulation that occurred in this area. If you're not and you want to hold because there is a belief that there is going to be continuation to the upside, hold on to it, my bro, and wait for the next bull cycle. Wait for it, you know? But let's just go into Bitcoin just for a split second to understand where we are. So look at that beautiful move to the upside, but Bitcoin doesn't seem to be going up anymore. Where are my vector candles? Where am I seeing structures? What's going on with order flow? Well, let's have a look. This is Bitcoin on the 12-hour time frame. We've seen in the last hour 8,177 traders that have been liquidated to the total sum of around 20 million, wherein most of those traders are in Ethereum at 3.36 million. XRP traders are coming in at 2.73 million, and you can see with XRP we've got open interest futures has hit 3.91 billion because of what's going on with XRP. Like, okay, so Trump's selecting all these people for the Doge. He's selecting all these people for the Crypto Council. He's re-elected someone for the SEC, new Treasury Secretary. It's all great. Everything's moved up in favor. What's going to be the next good thing that's going to lead the markets to continue with this narrative to the upside? Well, it's the interest rates, guys, because that's the only reason why someone is going to exchange euros into dollars or exchange dollars into euros, which leads me over to the problem that we have in regards to the Bank of Japan. Okay, let me just bring that back. There it is there. I don't even know if I had it on the chart. Anyways, never mind. Bank of Japan. Expectation is that these guys are going to be hawkish. Okay, their meeting is on the 19th of December, and I will be live around that time, hopefully. Not hopeful, but I'm going to be live around those periods of time when they actually do declare what they're going to do with their policy rate. Just quickly going over into it right now, just put into perspective. Where are you? Come on. Here we go. So Bank of Japan's policy rate comes out after the FOMC statement. Okay, so on December the 18th, and then going into the evening, we have the Bank of Japan press conference. It's more than likely that I won't be awake during that time because it's tentative, which means that it could come out at any given time within the Asian session time frame. Okay, so the expectation is that it could be somewhat hawkish, but of course they're going to make their move based on what the Fed's going to do, and of course any data that comes out beforehand which could actually impact their decision to actually increase the interest rates which means that if that's going to happen, the yen is going to end up becoming a safety haven, dollar's going to drop, euro's going to go up, NASDAQ and S&P are going to get slapped across the face, the US bonds will then end up going higher, which probably would make sense why Saudi Arabia have actually increased their holdings, with the expectation is that the yields could actually, well, the bonds could actually increase in value. So they're not only locking in higher rates, they're going to now hold a lot more US bonds that are going to be worth more in the future. That's all going to be based on what the Bank of Japan decide to do with their interest rates. Okay, cool. Now, with that being said, guys, just to have a look at Bitcoin's price action. Over the weekend, we haven't really seen that much. We've got the Thanksgiving recovery, or the return of Thanksgiving as such. We've got the NASDAQ right now just still trading. It's not really doing too much, but the market will be open in the next 5 minutes or so. But you just want to be careful with the NASDAQ. It might start pulling some very interesting price movements going into today. But just looking at Bitcoin's price action, you can see that it's still right now hovering around the 5 and 13 EMA. You got this area down here. Now, let's just put it into perspective. Could Robert be of the impression that Bitcoin could drop? Do you guys believe Bitcoin can drop to 60K? I've seen your price projections. It's impossible it could ever go to this point. It's impossible it could go to this point. It could go to that point. Just remember, whenever you're making a projection about Bitcoin, consider who's holding more of it that could actually move the market. Not what you would like to think. Consider who's holding the majority of it that can make an impression on it. Okay? If the OG holders ain't around anymore that can make an impression, then who's the next G? And it is BlackRock. They're the ones that are going to decide. Now, looking at the market, I'm not seeing any offloading in the actual ETFs themselves. Just quickly going over to the ETF price action. We do have some gaps in the ETF, and they are scheduled to gap down at the open as well. We've got another gap down problem down here as well. So that could be an interesting point for us. But guys, look, if you want your Bitcoin to be expensive, make sure it is that, make sure you keep paying premiums for it, okay? So that the investors that want to sell at significant price points and make a profit, they're selling to you. Remember that. You're helping someone make profit when you buy Bitcoin at higher prices or as it's going up. You want to get involved when the guys that want to sell at high prices want to buy. That means you want to be getting involved in these areas down here. Someone down here wants to buy $1 million worth of Bitcoin at 94,602. Okay, we've got another order down here for 10 million at 93,520. Then you've got a dude all the way up here, all right, that wants to sell around $20 million worth of Bitcoin at the 100K mark. So let me just find it. There you go. Is he there? There he is. 20 million.11. They want to sell at 100K. And that order has been there for quite some time. So it looks like they're committed, waiting for Bitcoin to sell at that point. Okay, their order could be removed. It could be removed if Bitcoin were to go down and correct a little bit more. But there's nothing to say Bitcoin can't hit 100K, because we've got a week this week that could actually lead us to it if the data does suggest that the Federal Reserve should be more inclined to cutting interest rates. We need the US economy to slow down. We need the unemployment rate to go up. We need the jobless claims to keep on going in higher. All right. We need the prospect of the Japanese yen not having an interest rate increase, which will then fuel the idea that investors are going to use the yen, sell it, put it into dollars, then use those dollars to go and buy assets because it's cheaper to borrow yen. That's what you're looking for, okay? To put it into perspective, guys, going into the market open itself, I would say just be very mindful because Bitcoin has tapped the 13 EMA right here. There are imbalance points in the chart that could suggest maybe if we were to see 60K, all right, just bear with me just in case it upsets anyone, all right? We don't want Bitcoin to hit 60K, but what we want to see is Bitcoin to get a little bit cheaper before it can continue with its narrative. And the idea is that you want to try and grab as much liquidity as you can and then load up on Bitcoin and sell as it goes into the moves to the upside. Be the guy that's ready to sell his 20 million Bitcoin up here. Be that guy, okay? Don't be the guy that he sells to. That's the whole point of trading. That's the whole point of investing. You want to sell to the person that is prepared to buy from you at the highest possible point. Yeah. Capiche? Does that make sense, ladies and gentlemen? So, with that being said, we'll be tuning into tonight's live stream to see what Bitcoin has ended up doing. Remember, don't shoot the messenger, bro. I'm just telling you what he said. Now, what we do about it is another story. Okay? Take profits, ladies and gentlemen, as and when, and buy it on the cheap. Take care of yourselves, gang. Mad love and respect.